Hi guys, welcome back to another video. Again, you can see I'm wearing my helmet to represent mining because my investments now they are more focused on mining because it's actually my cycle of competency. I'm not saying that I'm no longer investing into technology stocks. No, I am investing into tech stocks, but now I just want to build a portfolio that is focused on mineral resource or natural resources. So, I think you guys are aware of what is happening around the world with regard to the war between US and Iran, and also US teaming up with Israel and then attacking Iran. So this it has caused some chaos within the financial markets in terms of the oil prices that went up. I think oil now currently is trading at around over 90 US dollar per barrel because of course a lot of oil comes from the Middle East, and also it comes from Iran. So what Iran did after actually, you know, exchanging missiles between them and Israel and US, they then just closed a passage which is known as the Strait of Hormuz. So that Strait of Hormuz, it's the passage of most of the ships that are from Middle East that are going out to some other parts of the world carrying these oils and other products. So they pass through Iran through this passage which is known as the Strait of Hormuz. So they closed that by placing these mines, these bombs there around. They are bombing every ship that is trying to pass through that passage, which is closer to Iran. So that it has caused a skyrocket in terms of the prices of oil. Price of oil it has went up. It's trading over 90 US dollar per barrel, and of course that will affect the global economy. We're gonna feel it, even us here in Africa, in terms of inflation, because when the oil prices goes up, then that will cause inflation to go up again. So we don't know how long will this war last, but I can tell you one thing, that there are some of the parts of the financial markets that are already starting to correct, to decline, or prices to fall, or businesses of some of the good companies are starting to decline. For example, within the copper sector, within the mining industry. So the copper side, the copper sector, it's actually declining. Most of the copper stocks are declining, and I own Ivanhoe, which also mines copper here in DRC at the Coca-Cola complex, and I've already added shares. I've deployed my savings, 46K, to add more shares because I previously owned around 400 shares. Now I just added more shares. Now I own over 700 shares, and the goal is to own 1,000 shares of Ivanhoe. So the reason why most of these copper stocks are affected is because when Iran closes the Strait of Hormuz, that impacted the copper stocks, because most of the copper mines actually they are using what we called sulfuric acid. Now, sulfuric acid is used within the plants, a concentrate plant, a plant where all the ore that is mined from underground or on surface is processed into a processing plant, which uses sulfuric acid to produce the copper concentrate, which will then later on be sent into a smelter, or it can be shipped overseas for further processing or further refinery. Now, that concentrator or that plant, that processing plant, it uses a sulfuric acid. And to make a sulfuric acid, you need what we call sulfur. So you need sulfur for you to produce sulfuric acid. So a lot of sulfur actually comes from the Middle East. So it's a byproduct of oil and gas refinery. And as you know, a lot of oil and gas comes from Middle East there. So when Iran closes the Strait of Hormuz, it didn't only disrupt the oil market, but it also affected some of the products such as sulfur. And almost a quarter of sulfur global supply comes from Middle East. So you see that now it affects these copper mining companies, because now some of them they cannot get sulfur, which is then used to make sulfuric acid and then produce a copper concentrate into their processing plant. So basically that means that they will produce less copper concentrate, and they will, if they're gonna produce less copper concentrate, their sales will drop and earnings will drop. So hence the stock market is already anticipating that these companies, they will report actually low or poor earnings in future if this war continues, because they won't be having enough sulfuric acid to process the ore from the run of mine, from the pit or from underground, to produce a copper concentrate. So that will affect their earnings in future. Hence, the stock prices are declining in the copper sector. And also most of the ETFs that tracks these big companies of copper companies are also declining. But there are some companies that are good within this issue here. So if you look at the copper industry, there are companies that are good because there is an alternative also for producing sulfuric acid, which is a copper smelter. You know, when you smelt copper, when you take a copper concentrate and send it to a smelter, the byproduct there is also sulfuric acid. So there are mines, copper mines that have a smelter, a copper smelter. They are more like on a safe side, you know, e.g. companies such as First Quantum that are operating here in Africa, and Ivanhoe Mines, which is here in DRC Congo. They also recently opened their smelter, and they are producing like 1,200 tons a day of sulfuric acid, which is also their byproduct that they're also selling to make more money. But of course, they can offset this challenge by just taking that sulfuric acid and then feeding it into their plant, instead of struggling with all these issues with this supply chain disruption of sulfur. So they can use their own sulfuric acid, which is produced as a byproduct from their smelters. So those are the copper companies that you need now to be buying to take advantage of this pullback, because one thing for sure that I know is that we will need copper. The copper outlook for the next 5 to 10 years, it's very, very, very good because of electrification. A lot of people around the world, they still don't have access to electricity. And for us to provide them with electricity, we will need a lot of copper, because copper is a good conductor of electricity. And number two is the energy transition. As we get rid of dirty energy, moving to clean energy, such as hydropower, solar energy, wind energy, and electrical vehicles, that will use a lot of copper. So we'll need a huge amount of copper. And also the advancement of technology, such as humanoids, these human robots, those will require a lot of copper. But we're talking about in the next 5 to 10 years, we're talking about 2040s, so we will need a lot of copper going forward, and we have underinvested into new projects that will actually turn into mines and produce a lot of copper to meet this demand. So the outlook for copper in the next 5 years, it's actually good. So this is an opportunity for you now to start looking for these great companies that are mining copper and buy them. I'm talking about the likes of Southern Copper Corporation, Ivanhoe Mines, Vale, BHP, Glencore, First Quantum. And if you are scared of buying these individual stocks, you can also buy copper ETFs, such as the Spot Copper ETF, the Copper Junior ETF, which is COPJ. It's a ETF that tracks the junior mining companies of copper. Or you can buy an ETF that tracks the more profitable copper mines, which is the Spot Copper ETF. You can also buy that. But remember, guys, I'm not a financial advisor. I'm just sharing these videos for educational purposes only. So please don't just go out there and start buying these stocks. You still need to do your own due diligence so that you can be on the safe side. So when it comes to the US stock market, so far, I haven't seen any major declines. It looks like the market is still stable. But of course, I will just wait, and see what is happening. But when it comes to the copper stocks, I've been adding Ivanhoe Mines into my portfolio. I've been buying more shares, buying the dip, because already these ones, they've corrected a lot from their previous all-time highs and they're undervalued. But the US market, it's still a bit expensive. I'm still waiting for a major corrections that will actually make most of the good companies to be significantly undervalued. I'm talking about the blue chip stocks here, the likes of Microsoft, the likes of Amazon, the likes of Meta, the likes of Alphabet, which is known as Google, and also other great companies in the US market. But for now, I haven't seen that, and I'm waiting, and I don't want to predict and start looking for shiny things that I think they might go up because of the war. No, no, I'm just chilling and waiting and observing what is happening in the markets. What is it that is actually declining? What is it that is interesting, that looks cheap, that is within my investment philosophy on how I invest, So if you enjoy this video up until this point and you are new to this channel, please do support the channel and click that subscribe button. And if you like the video, please do like the video and share it so that it can reach more people out there who wants to build wealth through stock investing and create their wealthy. So that's it, guys, from my side so far with my short update to the market. I'm not being confused or running around. I'm just sitting, waiting, and watching and buying what comes to me, which is within my investment philosophy. Once more again, guys, this is not for, don't take it as financial advice, man. It's not meant for financial advice. It's for educational purposes only. Please do your own due diligence. Here, I'm just sharing you things that I'm doing on my portfolio, what I'm adding, what I'm buying, what do I think about the market, what do I see in the market. So you still have to go and do your own research so that you can be more confident on your positions. You can also consult your financial advisor further, that's also due diligence. With that being said, guys, I will see you in the next video, and bye for now. Happy investing. May the markets be with you. Bye.